Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning my guest is John Baugh, who's Managing Director with Stifel Nicolaus. John, how you doing?
Great, Kemp. Thanks for having me on.
Yeah, good to be with you. I wanted to talk to you about third quarter results, and let's start with Interface. This is the first quarter Interface has been without Bentley, and they're suffering through this Australian fire. But European, actually, while I first looked at it, I thought Europe was going to be dragging them down, and actually it's good news out of Europe, isn't it?
Western Europe's still under some pressure. I think they're holding up reasonably well. They're undergoing a pretty major restructuring there. They're big in the UK. I think that market's held up a little better recently. Russia and other parts are showing some growth. So, I think given what they're up against, pretty good results. You mentioned the fire in Australia, certainly, a disappointment, and it sort of disrupts your service flow there. That economy, by the way, too, is some serious headwinds. So the combination there is tough, and that had been a high-growth market for them the last few years. They'll get through that. They'll be able to, I think, build a new facility somewhere else, and ultimately could prove beneficial, but, a difficult transition period. Domestically, I think we're still looking at tile taking share from broadband. That's good. Pretty decent numbers out of the office corporate arena. I'm still waiting for a lot of the cash that corporations are sitting on to get unleashed. I think a resolution of the fiscal cliff would certainly help on that in that regard. But we got a lot of pressure on the government, institutional education, sort of public spend side has been tough. So kind of cross currents there, but absolute growth in the U.S., pretty stable raw material situation. So all in all, more green lights, I'd say, than yellow or red lights.
Mm-hmm.
It's kind of been an uphill slog in Europe, and in the public spend piece, where they're doing well is in corporate in the U.S., and there's still some growth in Asia.
Okay, one more quick comment about them. They're going direct to market on the residential side with these floor stores. They're going to open 12 this year. They had 6 before that. They'll have a total of 18. I think they're doing $1 to $2 million per store. It's not green yet as far as profitable. Black actually seems to be a pretty good business for them, doesn't it?
Yeah, I failed to mention that it is getting material. I think they've found that the Internet catalog strategy only got them so far. Mm-hmm. And obviously we're not going to be seeing floor stores in Peoria. But major metros, it makes sense. I think like a lot of retail, if you have the catalog Internet backing up the retail, doesn't matter where the order gets placed. It's getting the order that matters. So seeing some terrific numbers out of their Soho store. They've been established in Chicago for a while. Good numbers there. So, I think it's, I know they ran a 15% off Black Friday event, mm-hmm. which I think rang the cash register a little bit. So I think they're kind of getting off the tarmac on that business. Yeah, there's still a lot of, drag on earnings from growing a store base from scratch. But, I think they're making progress.
Right. And they are renting those stores, so the investment.
Sure. Oh, yes. Yeah. Lease locations. Yep.
All right, so Armstrong, just to move to them, their third quarter results, their top line was off about 5%, but they continue. Actually, you made the comment that their EBITDA is up 11%, which is a record since their bankruptcy, right?
Yeah, what they've been able to achieve on a cash flow and margin basis has been impressive, without a whole lot of revenue to work with. Their core end market, in the United States, and I'm talking flooring now, leave the ceilings out, is, the repair, remodel. They're big with the home center channel. That business is fairly, really hadn't recovered. I mean, we can get all excited about the home build piece, but the remodel piece is still challenging. Certainly we see that in carpet. But it's true in wood and ceramic and vinyl, even in the repair remodel piece. So we're waiting for that to lift off. The units of ceilings on their building products, they call it, I call it ceilings, is down. We're down mid-single digits in units. They've gotten almost mid-single digit pricing, so it's relatively flattish on the revenue line, and obviously that kind of pricing helps your margin. So combination of pricing in ceilings, really tight SG&A controls, and yet down units has created this sort of flat revenue line with expanding margins, and so that's why you're seeing record profitability, even though they're facing some pretty good headwinds.
Help me again, because you see the numbers obviously in more dimension than I do. The divestiture of cabinets and the divestiture of wood distribution, is that where the 5% decline in revenue comes from?
No, again, they're going to be backing out those numbers.
Okay.
We're looking at, in the latest quarter, and there's certainly some currency in this. The resilient was off 9%, and the wood was off 4%. I'm not sure about the wood. The wood may have not have backed that out from a year prior, but the distribution piece was pretty small on that number. So, in cabinets is zeroed out. That doesn't explain the decline. As I said, they're challenged in units and in ceilings for sure. We got some revenue offset, but with the foreign currency translations hurting materially, we're looking at down revenues for Armstrong.
All right, so the last one is the one that actually Mohawk. It's got a lot of activity, to say the least. And their quarter and year to date up 2% on the revenue side, and earnings are doing very nicely. Obviously, they bought Pergo for $150 million, so they're changing the whole dimension there. With that acquisition, that's number 2 buying number 1. That gives them, I think, about 35% market share. And then the rumor is that they're talking to Marazzi worldwide to buy them. And the way I run my numbers, that gives them in the ceramic tile market almost a 50% market share in the U.S. That's a very interesting company to watch.
Yeah, I guess we need to take them seriously the next time they say, well, our balance sheet's now in a position where we're going to entertain acquisitions. Their leverage ratio got down to 1.7 times debt to EBITDA, and they said we're going to be looking at acquisitions, potentially sizable ones, and likely offshore, and bingo, bingo. Now, Marazzi obviously is a rumor, not a fact at this point, so it's hard for me to comment on that other than what we know about Marazzi. The Pergo deal has to make all kinds of synergy sense. We'll see what they do with their overlapping operations. Lack of vertical structure, I think, for Pergo here in the U.S., so they'll benefit from Edelin's position here for sure. Edelin's a beast in Europe, so I got to believe that thing is going to be materially accretive to earnings once we find out precisely what the numbers are and the plans are, but that may take a little while. So I'm excited about that. The Marazzi's a little tougher to gauge. Obviously, private entity, we don't know the numbers. That would not seem to me on the surface as much of a cost synergy deal as, sort of intellectual property kind of technology, style design, leadership, process know-how that maybe helps the rest of the Daltile organization, as well as, there is some overlap in the U.S. that, as you said, concentrates share probably to north of 50% by my calculation, but not a known deal, so a little hard to comment. I think the key out of Mohawk in the third quarter was the kind of leverage you see to earnings on what were very modest unit gains. As you know, they're doing well with the silk, smart string, and carpet products. The Daltile numbers were strong, both on units and margins. And you got to be impressed with what Edelin's done in the teeth of the Western European economies tanking. So really encouraging what we call contribution margin, meaning the level of EBIT increase versus the level of revenue increase in the quarter.
Yeah, just to echo what you said, it says in their comments for third quarter that the Mohawk segment is flat, and it's Daltile and Edelin that's up 9 and 10%. So.
Yes, but we still saw a 10-15% increase in Mohawk EBIT on relatively flat, slightly down, actually, revenue. So we're even getting some earnings leverage out of that segment. So if we ever get carpet to recover, this could be a good ride. Obviously, the Daltile segment's a little more tied to new construction than is the Mohawk side. There's obviously tailwinds there. That looks strong. Commercial construction looks like it's beginning to pick up. There may be a year or so lag before they see that in their orders. But, a lot of early indicators are improving. Home prices are going up. Repair, remodel activity, I guess it's off a bottom and improving. It hasn't really improved much yet, but there's a long way to go. I would think there's a lot of pent-up demand. Touch-up areas that have been worn out, uglied out, trafficked out, styled out, whatever. We've had a long, long recession. I know we've talked about this before, Kemp. The duration of this recession is unprecedented. unless you go back to the Great Depression. And that matters because it just means that we've gone that much longer without updating, repairing, remodeling things. And I'm convinced that the desire is there. Now we just need the income, confidence, ability to borrow. Home equity lines might be coming back into play if we get home prices going up.
So is 13 the year, or are we going to wait till 14 before we see all that break?
Yeah, I guess a lot will hinge on this fiscal cliff issue, what happens with taxation. There's so many variables that's tough. What I can tell you is that housing has gone from a sector of the economy that has certainly been a drag on GDP to now being an outperformer or accretive to GDP. And I think we'll remain in that mode for 13, 14, maybe 15, and even beyond that possibly. How strong that absolute level, will be dictated a little bit by, the variables. And we are looking at tax increases for sure.
Right.
What bearing will that have? Can we offset that with rising home prices and increased confidence? We'll just have to sort of wait and see how those macro things play out. There's some momentum for the first time in a long time in the residential world. In the commercial world, if you look out 12 months, some of the leading indicators are turning more positive.
Right.
As I said, there's a ton of corporate cash. I really hope we can address corporate tax rates. If we can get those lower, that might still instill some confidence in the corporate world. So a lot of money on the sidelines that could be unleashed there that could make that segment better. And we've got the construction piece, both residentially and commercially, in an up mode. That's going to be momentum that's going to be hard to turn the other way. So, I think there's some reason for optimism as we head into 13, and I frankly haven't seen for years.
That's good to hear. Okay. Well, John, it's good to talk to you. Again, we were talking to John Baugh, who's the managing director with Stifel Nicolaus, and you've been listening to Kemp Harr and FloorDaily.net.